Hello and welcome to Market Views, a podcast series of Open Business Council and JPFS, where we discuss financial and trading news. And we have interviews with key personalities and engage with our audience. Now, today we have a very special guest, Norm Hart of Balanced Multi-Asset Mathematical Strategy. And my co-host today is Peter Kristensen from JPFS. Welcome, Norm, to Trademakers.
Pleasure to be talking to you today.
So, Norm, can you tell our viewers a little bit about the strategy behind BMAMS, the acronym that we'd like to use for this today, because it's quite a long sentence to say.
Yes. Well,
asset mathematical strategy.
Yes. Well, as sort of the acronym Balanced Multi-Asset Mathematical Strategy suggests, we are algorithmic traders. So we use maths to navigate the dynamic world of the financial markets, where we basically look for patterns and then we try and exploit those patterns to make profits. But the journey of the team started with sort of the shared passion for statistics and uncovering patterns. So yes, we are nerds, and then we use the data basically, and we torture the data to create strategies that offer an alternative to sort of the traditional trading methods of a human that might look at charts and do the trading. We instead use mathematics and sort of cold hard statistics and very strict rules to do our trading, rather than sort of a more artistic fly by the pants trading that a human might do. Mm-hmm. So we use high level computing power and then statistics to create these algorithms. And that then allows us to make sure that not only will we be able to make successful trades, but also sort of safe trading decisions.
That's very interesting. So as the acronym suggests, it's a balanced multi-asset. Therefore, what can investors expect to be invested in?
Yeah, well, we trade in a multitude of financial instruments to use the stock market indexes. We invest in commodities and in Forex. Mm-hmm. And we make sure that we're both safe and we have effective risk management. So we believe that the primary focus of our trading is not actually profits, it's risk. And if we can control the risk, then over time, the profits will come. Mm-hmm. Like I said, the most important thing is doing lots and lots of mathematical testing on our systems to make sure that the risk that we're trading on is safe and effective, and mm-hmm. that every sort of trading decision that we make and every statistical trading algorithm that we use is backed up by many, many hours of testing to make sure that what it promises, it actually delivers in a safe manner. And then what we also fundamentally believe in is transparency. And that's why we get on so well with Peter, because that's one of his underlying tenets as well. So when we report our results, they're always 100% warts and all reported. They can expect us as well to be continually improving. So with our method of trading, we can always come up with new ways to look at things. So we're using maths to look at the market, and just like you can look at even an art piece in many different ways, you can get the computer to look at statistics in many different ways. So we're always looking to create new systems and as part of that as well, we're also sort of continually looking to learn and improve on our own systems. So the recent explosion in artificial intelligence is something that is interesting to us at the moment. We haven't implemented any of it because, like I keep mentioning about risk, we need to understand more about it first. But it's another one of those exciting segments of the technology sector that really piques our interest, and hopefully we'll be able to provide even more opportunities for trading systems.
Thank you for that. So, I mean, just tell us a little bit more about how long has the program been live and what has been your results?
Yeah. Well, our systems have been live in their current iterations for 2 years. So while we have worked on this particular algorithmic journey for many years, we were only sort of satisfied with the way that we were building and implementing our systems for just over 2 years. So that's the history. And then we've been since almost coming up to a year with Peter and trade makers. So if I can even bring up our results on my screen there. So as you can see, it's got lots of little ups and downs, like a good hiking trail up a hill. Yeah. But what we like to see is that you can draw a line from bottom left to top right. So over time, it trends upwards. And one of the ways to know that a trading system is safe is losses. So it's sort of a little bit counterintuitive, but if you see losses in a trading system, it actually should give you confidence that they're not sort of hiding some massive drawdown in the back end that sort of suddenly blows up and brings you down like Barings Bank or something in the 90s. So as for actual returns, in 2021, when the market was recovering from COVID and going gangbusters, we returned about 25%. But of course, in the past year or 18 months, the market's been far more challenging. So last year we returned 4%. And then year to date so far, we're about 4% again. However, even though that seems like it's a low amount, what we're really proud of over the past 18 months of really difficult markets been our drawdown. Our maximum drawdown has only been 3% over that period. And so to put that sort of into perspective, the S&P has been down by as much as 25%. So when we talk about capital preservation and risk, we actually demonstrate it with our results.
So if you looked at your return and the risk that you had on in order to achieve that return, what does the risk look like?
Yeah, well, for the 4% risk, we've had a 3% drawdown. So this year, so we're returning more than our risk, and of course, we've still got half a year left. So in 6 months, we've returned 4%. So our aim is to keep the risk very low, because when people are investing with us, they're trusting us with their money, and money's for most people is something that's hard work to earn. And so we want to treat their investment with us with the due respect that it took to earn that money in the first place.
So Norm, tell me a little bit more in terms of where are you based and where are you regulated?
Yeah, so we're in Australia, and we work with JPFX under trade makers. So we work under their regulation, and not just the regulation, but their observation, because Peter's an exceptionally experienced trader. And so when we were introduced, Peter put us under the bright light and interviewed us extensively and went over our results with a fine-tooth comb before he accepted us under his banner. So by doing that, clients can actually be even more confident, because there's an extra level of oversight over us, because not only do we have the statistical oversights, but we've got Peter's experience and the whole team that keep an eye on our trading results to ensure that what we preach about the safe trading actually continues to be delivered by us.
Indeed. So, Peter, I mean, can you just explain to us in terms of if an investor wants to invest in the strategy? So who's the custodian?
We use, as JP Fund Services, we use SGT Market, which is an FSC regulated entity with the indemnity insurance and all these jingles and bells that we have to have today with all the regulations and so forth. But just want to go back a bit to what Norm was saying. Yeah, when we actually met Norm for the first time, and before we actually took it under our umbrella in JP Fund Services for leasing, actually I would say the strategy and the software in itself. Then, funny thing was, it was like a hand in glove, to be honest. Norm was spending like 90% of the time talking about risk instead of actually talking about profits. And been in the market for almost 40 years, then it's nice. Because profit, as Norm was saying, profit will come, but you've got to manage the risk.
Yes.
And this is not a program that you're going to make 40% a year. I don't believe that, or in those strategies. Depending on if you want to take the risk of a dip of 30 or 40%, whatever it might be. But this is a long-term, nice and easy, steady yielding. And it's been doing that ever since we started, and also before, when we actually went in to look at, with a fine-tooth comb, look at the strategy and all the nitty-gritty within inside the strategy and the leverage and all the positions that are actually being taken. And what I do like about the strategy is it's very careful. It doesn't go over-leveraged or anything like that. We look at it. I don't have to look at it every single minute, which we are overlooking the strategy all the time. But because that it is so careful, sometimes there's no trades, because if there's nothing in the market, I like that there's no trades. So that's a bit what we liked about when we actually met Norm the first time, a bit more than a year ago. And we also invested our own money into it. And what I say is, that with the regulations and all these things today, then SGT is also controlled every single month by a third-party accountant, which we have to according to the regulators. And that's what it is.
So in terms of investing in this strategy, okay, can you tell us a little more of how somebody can actually participate and potentially benefit from being an investor in this type of strategy?
Yeah, we try to do it as simple as possible. So an ordinary investor or high net worth or whatever it might be can just open an account with SGT Markets. There's no cost for opening the account. It takes 4 minutes approximately online if it's an individual. If it's a corporate, it takes a bit longer time because there's some manual work and documents that has to be uploaded. But we've done it really, really simple. To withdraw the money from the strategy, it can be done weekly. We prefer monthly. If there is an investor saying, "Oh, I badly need the money not tomorrow, but the day after tomorrow," we can. I would say in urgent matters that can be done as well. So we try to be as flexible as possible. It won't affect actually Norm's trading or any other investors within inside the program, because we will take care of that liquidity in the background. So we try to make it as simple as possible for the manager as well, so he doesn't have to adjust his positions all the time just because there is a person actually going out of the portfolio. So we take care of that in the background to make sure that Norm's work is as simple as possible, not to control that, but just to control the trading. And I would say have a longer term view. It's not a recommendation, because recommendation is a word that gotta watch out using today. It's a suggestion. Have a longer term view. Look at the percentage that the portfolio and the strategy is yielding. Not look at the nitty-gritty intraday. It's nice. You can follow the intraday performance on trade makers. You can follow it on a day-to-day basis. You can also follow it on an hour-to-hour basis. You won't be able to see all the positions, but you can follow what is the performance on an hour-to-hour basis. So try and do it as transparent and as simple as possible, and that's it.
That's a very, very, very interesting way of giving people access to some very, very exciting strategies. And Norm's strategy is, as you know, a very, very systematic, mathematically driven and focusing on risk strategy, which is very, very interesting. And I applaud it, because it's a steady approach, and I do like that. It's not shooting from the hip.
Yeah, that's I got to say as well. Sorry for using this word, but we look at when shit hits the fan, what's worst case scenario, and if strategists or asset managers or software providers can't answer that question, it's going to be a very, very short conversation with us.
Mm-hmm. I totally understand. I mean, we're not recommending people who, do this. We're not making any recommendations, but we're asking people to at least make a consideration and look at it and do their due diligence and talk to their advisors that they're working with to make sure that this fits in their overall view of the.
Yeah, that's exactly, Hilton. And that's the beauty about the setup. You can tip your toes into the portfolio and say, do you know what? I like to try with $10,000. If I like it down the line, I can always add 20, 30, 50, or 200, or whatever it might be, but you can test it out. You don't have to test it out with $200,000, because that is the minimum. You can test it out nice and easily and build up your portfolio. And that's the beauty about the setup that we actually have, which, as far as we know, is the only one in the world doing what we're doing, to participate in programs like this. That is controlled by a third party, that is overviewed by another third party. So, as Norm was saying, capital preservation is very, very good. But to get more than what the interest rate will give, putting it into the bank or getting short-term bonds or short-term govy bonds, then yes, you've got to take a risk.
Absolutely.
But that risk can be managed by minor amounts, testing things out. And that's it.
Norm, I have an extra question for you. I mean, I know we've been in a bit of a volatile interest rate environment with massive increases in interest rates. What impact has had that on your returns, and or even opportunities from your side? And what has been your view in terms of what you've seen in terms of how the risk has played out with such a steep rise in interest rates?
Yeah, well, we're seeing a change in the macroeconomic situation that we haven't seen in recent history. We've had, since 2007, exceptionally low interest rates for a long period of time. And after the recovery from the 2007 financial crisis, we went into extended bull run through all the different markets. And so, as people might be aware, we build our systems on the historical data. So it looks at that data in those periods of low interest rates and a bull market. But we need to then use statistics to make sure that when things aren't so rosy, our systems will still manage quite well. And so that's what we've seen in the past 18 months, is a market that has been unlike any other that we've seen for over a decade. And we are very happy that we can say that in a market that our systems and that no one had seen for 10 years, our systems performed very well in. Our returns when we were in the spectacular bull market was 25% for 2021. And now so far year to date in the first 6 months has been 4%, which you think, well, that's a substantial drop, and undoubtedly it is. But in this market, we don't like to compare ourselves with others, but we will compare it to, say, the S&P 500 over the course of the last 18 months has seen very large drawdowns, whereas our systems have remained nice and controlled in the drawdowns. And we have no doubt now that come markets that are more stable because there's less macroeconomic shocks because of interest rates and inflation rates and employment rates and all those sort of macroeconomic news that markets react to. Once they calm down again and we get back into growth, once this period, which could still extend for another 6 to 18 months, once that period's over, that we're in an exceptionally strong position to continue making profits. But in the meantime, in these hard markets, we're equally as confident that we're going to be nice and strong and robust and keep ticking away at the profits while we wait for the markets to sort of return to recent historical norms.
Thank you, Norm, and thank you very much, Peter, for a very interesting introduction to the balanced multi-asset mathematical strategy.
That's a long word.
I know.
What, just call it BMAMS.
And I very much look forward to a follow-on conversation with you, Norm, because I think that we do this regularly. We do a regular podcast series, and I'd like to bring you back on board as the market plays out and your returns continue to be, downside risk protection and some opportunities in a difficult market. So thank you very much for joining us today, and I look forward to our regular podcast on market views. So follow us on JPFS and openbusinesscouncil.org, and please engage with us on these links below, and as well as on LinkedIn and Twitter, and send us questions for our next episode. So goodbye, and thank you for watching.